Time now for the word on Wall Street. Top investors watching your money. Joining me now is global real estate advisor Jenna Stauffer. And with me, of course, still for the hour, Mike Lee. And Mike, we'll start with you on this big news with Apple and NVIDIA. They're going to be investing in OpenAI. Microsoft is already in their Thrive Capital for this new fundraising. That would take OpenAI to $100 billion in valuation.
Yeah, so it's sentinel moment for AI, and so Peter Thiel was on Rogan a couple weeks ago talking about the kind of turning point where once you could get AI to act like a person, right? That was a really sentinel moment where a lot of the other applications that NVIDIA chips are being used for is more about data crunching and selling products better, running things more efficiently, taking all this big data and putting together. So OpenAI, in where it can act like a person and kind of give you all these answers that you want, is one of kind of the turning points in technology history. And companies like not necessarily NVIDIA, but Apple, where Google's setting up their own Gemini, which ended up being a bit of a disaster. Apple, you would think, could set up their own AI product so that they could sell it on their iPhone, which they're hoping, on their iPhone, which they're hoping to spur into a massive upgrade cycle. They are signaling with this funding that they are probably not going to make the investments to develop their own AI product and to kind of bring this in from other people they had previously mentioned, that they are going to use OpenAI for their main AI functionality. They will bring in some Gemini later on, but this is a pretty spectacular sentinel moment where people want to get involved. To don't want to get left behind. And in the stake in NVIDIA, we were talking about this earlier with Michael, that it's about locking up the supply chain, supporting what's going to be one of their biggest customers, and all the applications that are going to be used off OpenAI, off ChatGPT, out into the world. So I think AI continues to dominate, to be one of the major economic trends. Even if the economy weakens substantially, you're just looking at a larger portion of IT budget. Money that's already set aside by corporations go toward technology. The amount of wallet share inside that for artificial intelligence is increasing, just like cybersecurity, where other things I think will be left by the wayside for the time being. So I think there's a lot of runway with AI, and it's just going to keep going.
Yeah, Jenna, actually, the first group, really the first industry that celebrated AI was the real estate industry, because agents were saying that they could actually manufacture listings faster, and it took work off their plate. I thought that was interesting.
Absolutely. It's going to be a big thing. I mean, it already is a big thing for our business, and we'll continue to really see the impact that it's going to have here in the future.
All right, well, let's talk about U.S. pending home sales data. That came out yesterday. This is a big surprise, everyone. So it fell 5.5% last month. That's the lowest level on record for pending home sales. That was July. Now, we still have higher prices. Borrowing costs are still seem to be scaring buyers away. And then the 30-year fell for a second straight week, 6.35%. We haven't seen that since May of 2023. So how's all of this affecting the market right now? Are things as bad as we're seeing with this pending number?
Well, I think that there's still a lot of caution. There's a lot of uncertainty out there. And really what's happening too is buyers are they're under pressure. They're under pressure from economic challenges. They're under pressure from affordability challenges. And really the big thing that we're seeing with affordability, why this is such a big issue for so many people, is that you have your wages, your income levels have not been able to keep up with the rise in home prices. Home prices up over 50% in the past 5 years. Well, wages are not at that level. You have the median home price 5 times the median income level. This gap that we have between wages, between home prices, it is creating such a significant barrier for so many potential home buyers. And this is why I believe we're seeing these numbers, like with pending home sales, they're low, even existing home sales. Last year, we really had the weakest number in home sales that we've had since 1995. This year is not faring much better. Activity is still muted, and it really has to do, I believe, with these affordability challenges.
What about the interest rate story? Because we're expecting the Fed to cut by a quarter point. It could be half a point next month, but interest rates are starting to come down in anticipation of that. And I think a lot of mortgage companies are somewhat at this point kind of desperate to get people to sign up and get a mortgage. A lot of commissions out there are not being paid out right now. So do you think that continues? Like, how quickly could rates go down if we get that Fed cut next month?
I don't think they're going to fall significantly enough to really see a big turnaround in the housing market. It's not going to take away the fundamental issues that we have in the housing market, which, as I've just said, is affordability and then also the lack of supply that we have. So we still have a lack of supply. You know, for existing home inventory, we're at a 4-month supply. To have that healthy, balanced market, we should be at a 6-month supply. And of course, the market's very bifurcated. So you have some states where inventory levels, they have really picked up, Texas, Florida, and then you have other states across the country in the Midwest, Northeast. The supply cannot match the demand. So this is why we continue to really see home prices go up. So even with a drop in rates, it's not going to erase the fact that Americans are still going to be facing the most expensive housing market that we've really had in history.
Wow, that is amazing. Real quick, before we run, I do want to get your take on Dollar General. That stock really plunged yesterday. They cut their outlook for 2024. I mean, they're saying basically that customers are financially constrained. Dollar General customers are financially constrained?
Yes, so it's look, you're seeing the bifurcation in the economy really continues in that those at the top have never been wealthier, and those that own financial assets, inflation is a huge benefit to them, whereas those at the bottom, they're just getting crushed. And so this is nothing new. I mean, you've seen this subprime auto loan default rates, highest levels ever. Credit card balances, highest level ever. Credit card delinquencies over 90 days for the outside the top 100 banks, highest levels ever. In the top 100 banks, we're getting closer near that. The savings rate is collapsing, but wages for the bottom half of this country simply have not kept up with inflation. You're seeing it in Dollar General's numbers. You saw relatively bad news from Five Below, another lower budget store, so $5 and below. I'm a huge fan of Five Below, but anyway.
But still.
This is inflation really hitting where the rubber hits the road and making things difficult for the lower end consumer.
Well, Mike, you're staying here all morning long. Jenna Stauffer, great to see you as always.
Great to see you. Thank you.
Thank you for being here.